Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on commodities. It's Saturday morning robe time. We're looking at the dollar. We're going to start monthly, longer term time frames. If you've been watching the commodity videos I've been putting out the last couple of weeks, you know I'm focused on the longer term, more clear setups in the commodity space. And when those more clear setups on the long term end up playing out and giving us the clear breaks that we're looking for, then we're going to be looking for that follow through. And that's going to be the opportunity that I personally am looking for. And perhaps later in 2018, commodities become a much more significant part of my trading. So until that happens, I am remaining very patient trading other markets. But what we're looking at the dollar is the key resistance on the monthly time frame. And our range is very clearly set, where we have a monthly uptrend from the December lows. Actually, it was all the way back. That's all the way back in 2018. So the early 2018 lows, but we have a monthly uptrend since then. Our most important support is 95.03. And here we are testing this resistance, which continually is rejecting the price, 97.69, 71, 71, 52. So the bulls are trying to make their way up through that resistance. And if we break it, then we have continuation of the monthly uptrend, and it's just a higher low and higher high over the past few months. And you can see the lack of clear resistance. If we do get continuation, we'd be looking up at 97.87 and then 99.89 as the next two resistance levels from there. Looking at it, zoomed in on the weekly time frame, we have our high and our double top. We have our low of the pullback. We had a little lower high and higher low very quickly being set, and this definitely favors the bulls. The fact that it only took 1 week of consolidation to establish this new support of 96.75 has us looking at this resistance to potentially be tested in the next week or two. So keeping an eye on the dollar bulls for the implications that it would have on the rest of the commodity space, as in general, the correlation with the dollar between commodities is inverse. It's most significant with gold, and it's least significant with natural gas as far as my observations go. And on the daily time frame for the dollar, big bull move. This was healthy consolidation, and we are now changing that momentum back to the bulls, and we'll see if that can follow through this coming week to approach those resistances. So the dollar got a clear bear break. This is the monthly time frame for the dollar. I am most interested in this pattern out of anything in the commodity space because it's a multiple year equilibrium pattern tightening up. So looking at our most recent ranges, we're looking at 1375 as the top with a lower high by $9 at 1366. We have our support at 1160. We have a lower high now set at 1346, and we have not set a monthly higher low. And the bear break of 1280, which was a very clear double bottom of support that the bulls wanted to maintain to try and make this a monthly bull flag, that has been lost. So the most likely scenario, in my opinion, was always going to be heading down to the mid 1200s to continue tightening this equilibrium pattern. I would have been surprised if the bulls were able to follow through with this move before this equilibrium gets tighter. I anticipate this equilibrium might play out all of 2019 before we get a break. If we see another red month, another 1 or 2 red months to get down into the mid 1200s, and then we'll look for the bulls to establish a higher low compared to 1160. We'll then look for a bull move and the potential of another lower high compared to 1346, our recent top. So that could potentially take another 3-4 months to continue tightening this range. And again, looking for a break Q3 or Q4 of 2019 and probably the latter, but always taking it one day at a time. Weekly time frame, just lower highs and lower lows. Anything under 1310 is now just a weekly lower high. And you can see the lack of support in this area until really the next weekly support that's clear is down at 1211. So I would expect the bulls to find some support before 1211, but it just shows us that because we made such a bull move back at the end of 2018, we don't have a ton of support established. So the daily time frame here was a descending triangle, and it was a fairly clear bear break. And again, it's a bearish pattern in general. This was the lower high pattern we were watching. We came down, held support, double bottom, lower high. There's our bear break. And we are going to anticipate, a bounce is going to come sooner rather than later in the short term. But keeping in mind that anything under 1310 is just a daily lower high as well. So the bulls can see a solid bounce, but still stay in this downtrend. And on the 4-hour time frame, it's just oversold bounces trying to play out. And again, it's a bit of a descending, or I should say a falling wedge that broke bullish at the end of the week. But again, we're just looking for a daily lower high, and the bulls have to change the daily trend to shift that narrative even the slightest, because if we don't change the daily trend, we're just still consolidating on the monthly, weekly, and daily time frame. So short-term bounce potential to start this next week, but just looking for that lower high. So the bull miners are pulling back on the monthly as well. It looked like a potential monthly bull flag. We're not ruling out that bull flag yet. We haven't pulled back enough to make that negated, to negate that pattern. So we are looking for the monthly higher low to form. It has not formed yet, just like gold. And the bulls have a lot of space to work with. Anything over 1728 is a monthly higher low. This entire bull move that has occurred since late 2018 all came off the low. So to confirm the monthly trend change, we need the higher low and higher high. And the sooner the bulls can form that higher low, the better their odds of seeing that continuation to change that trend. But if we look at the short term, it's definitely all bears. We had a tightening weekly pattern, breaking support, multiple support levels established over the last couple months. And the next support is down at 2022. And looking at it on the daily time frame, clear change in trend. So here's a little higher low and a higher high, and then we had a lower high and a lower low, and you could say that this was an inverse, or not an inverse, but a regular old head and shoulders pattern where we have now shifted that momentum to the bears. And again, same thing here. Anything under 2293 is just a daily lower high on any bounce attempt. So that's the key resistance that we're using as a benchmark, and no sign of a bounce at this point, but we know we're getting pretty extended, and a short-term bounce will not be surprising. GDXJ, much more significant pullback. Again, it's been so consistent over the last couple years of us doing this video where there's a clear strength in the senior miners and weakness in the junior miners comparatively. And there's little short-term bursts where that correlation changes, and we can see a little bit of strength in the junior miners. But we've had just a general rule of thumb. If you're looking bullish in the miner space, you're looking at GDX and you're looking at the leveraged ETFs that go along with it, NUGT and Dust, or bullish NUGT. And if you're looking bearish in the miner space, you're looking at JDST, which is bearish the junior miners, GDXJ. So that's just a rule of thumb. If I'm thinking bearish, I want to play bearish miners, I'm looking at the junior miners. If I want to play bullish, I'm looking at the senior miners. And again, it's just very clear how significant the difference is on many time frames, but here we are seeing it in the short term, or I should say most recent term, with our pullback. Again, from the high, how much have we pulled back? About 16% on GDXJ on the monthly time frame. And if we look at the pullback on GDX, don't fail me now, tool, it's about 11%. That's a very significant difference. So GDXJ, we're looking for the monthly higher low to form. There's no sign of it. The weekly chart with a clear bear break, and it actually already broke bearish. Again, 3 weeks ago, it broke bearish before GDX broke bearish. So lower highs, lower lows. The next support level is down at 29.25. And after that, there's a lack of support. Daily time frame, dumping down close to oversold. Anything under 32.59 is just a lower high. The bears are firmly in control of gold and the miners right now. Looking at oil. So I look at the long-term pattern and I say the most likely scenario is a monthly equilibrium. We have our high, low, and we're scouting for a monthly lower high to form compared to 76.88. At this point, oil has seen a bounce over the last 4 or 5 months of 53%. And to see an additional 19-20% to just head right up and break resistance is not likely in my opinion. So we are scouting for the monthly lower high, but we're not fighting the bull trend. We're just keeping an eye out and saying, okay, if I know the longer term pattern, I'm zooming in and looking for details to tell me that is playing out. And right now the details are not telling us that. So we're not fighting this trend and trying to go bearish without any reason to do so aside from the broader pattern. Because all we know is that broader pattern is what's most likely to happen, but the odds of that happening will increase if we get the little details being a loss of the daily uptrend, a loss of the weekly uptrend. So on the weekly time frame, we have a ton of space to work with. Anything above 54.50 is just a weekly high or low. So we know that when we lose the daily uptrend, we are just going to zoom out to the weekly chart and assume a higher low is going to form. So on the daily chart, we'd have resistance of 64.77. We set a low of consolidation of 62.98. We rejected from resistance by 18 cents, couldn't get the break, and now we're just seeing a tightening range. We've been within this range for 8 days, and if we get the bear break here, that's when we're zooming out to the weekly and looking for that weekly consolidation to take place with a bit of a pullback. This will have implications on the broader market as a whole, in my opinion, and if we do see oil start to shift momentum on the daily and the weekly time frame, I'm going to be watching very close for the S&P 500 to potentially follow along as well. So daily time frame is the most important, and we should see a clear break of this range this coming week. Natural gas, all bears, 5 months in a row of red, closed down at the low. Weekly time frame, lower high and lower low pattern, easily intact. And the next support level that we're looking at is down at 2535. That has broken. So now we're looking at 2541. That has broken. 2378 is the next level that the bulls are going to try and defend because they are weak. So we are not oversold on the weekly. We are oversold on the daily. Keep in mind that historically, it's always important to look back historically because there are instances where RSI levels can become meaningless. The bull move up, RSI was meaningless, and a lot of bears got hurt because of how extended we got. But if I look at this daily chart, I can say that on this entire consolidation, the daily RSI has not dipped far below 30. And this is in fact the lowest RSI the daily has seen since that high. So I make note of that and I look, okay, back before the major bull run, what was the daily RSI doing? And I can see that historically, over multiple years, the daily RSI does not dip below 30 far. And when it does, we usually get oversold bounces coming. So it's definitely time to start scouting for an oversold bounce, keeping in mind that anything under 272 is just a lower high. We're not looking to change any trends. We're not looking to go long-term bull. Natural gas, we're just looking for the oversold bounce to cool off RSI levels. The 4-hour RSI is absolutely crushed as well. It's down at 1267. So just looking at these levels right now, I assume that we're going to get a bounce going within the next, probably Sunday when we open. And if not, if we see this weakness and this 4-hour and daily RSI carry over into Monday, I will be interested in beginning a scale-in slow position to try and get some of this oversold bounce. All depends on how we open Sunday and where these RSI levels are when we start trading on Monday. Keeping in mind that, in my opinion, if you are going to be swinging these commodities, your best bet is to be trading futures where you can buy and sell as much as you want overnight, as opposed to being stuck in an ETF or a stock position trading off of these commodities as the commodities continue trading and your hands are tied when extended hours are closed. It's an unnecessary way to have your hands tied. This is a difficult game of trading, and that is a way to make it even more difficult. We want every little thing in our favor as far as traders go that we can have, and having our hands tied is not the way to do it. So that's an incentive to explore futures trading if you are looking at swinging commodities. So I will be interested in natural gas and how we open up. Anything under 251.6 is an hourly lower high. The only support level nearby is 2476. And if we were to see a lower open on Sunday, I would expect the bulls to start buying that dip. So we'll check back in on all of this. Gold bears in control, oil bulls still in control, but getting a little bit toppy, and natural gas bears in full control, oversold bounce anticipated. Hope you have a great long holiday weekend. Happy holidays out there. Do some good things, and we'll see you in the near term. So picking back up on adventure time, heading up the East Coast from Florida. It was August 5 years ago, and destination was the Northeast. I believe I was going to a friend's wedding. I grew up in Massachusetts, and the foliage was about to be popping off in New England, so heading back up for there and making my way along the coast as we go with some beautiful flowers. Thought this was a cool shot of the diversity. This was all in my campsite, all the different kinds of algae and moss and lichen and cool different colors, cool different shapes, orange, blues, purples, teals, greens, all breaking down wood. And one of my favorite facts is that trees were around before fungi, and I might be getting it wrong. It's either the bacteria that break down trees or the fungi that break down trees didn't exist when trees were thriving. And so trees would fall and die, and then they would just lay there, and nothing was breaking them down and turning them into soil. So certainly a different kind of world back then. This giant wasp took out a giant cicada right in front of my face as I was walking down the trail. I believe this is in Kentucky at this point. I like bugs. These are furnaces from the 1700s for metalworking. Just these big stone structures that allow the heat to get trapped, to get hot enough to be able to work with metals. So that was pretty cool. This is in, oh man, what is the name of this? Fort Fredericks. I should have checked beforehand, but Fort Frederickson, something along those lines. I think it's Virginia. I like the stuff from the 1800s. I grew up with my grandparents living in Gettysburg, Pennsylvania, the site of the famous Civil War battle, and I've been going there. I've been there 30, 40 times in my life or more. And so we got all that history, all the battlefield tours, the ghost walks, and all of that stuff. So it definitely still interests me. But a cool big old fort with big walls still around 250 years later or so. So this was just, I think it's a state park, and I was just around, hanging around there, and I did go back up through Pennsylvania, and this is the front page of the Gettysburg Times, I believe it's what it's called. Local farmer finds mutant ear of corn. The happy guy, there's his 15 minutes of fame, Ben Clunk. 3-headed ear of corn, front page of the newspaper. It's a simpler place. Then I hopped on the AT trail just for a couple nights. There's your shelter. And heading up now as the leaves were continually changing to the White Mountains of New Hampshire, my old stomping grounds. That's where my dad used to originally take us camping, and that's where I started to fall in love with nature. If you have children, take your children camping in a tent. RVs are cool, but take your children camping in a tent. It will probably change their life. And I'm 30 years old, and I can think back 25 to 20 years ago and how much of an impact that had on me and how it sparked my love for camping and how I then used that passion to road trip around the country and experience all these things because I was comfortable doing so, because I had an adult show me the way and show me how to do these things. And if I had never camped, it's probably, if you never camp and you're all of a sudden 30 years old, it's probably hard to get comfortable and to get into doing it consistently. Take your kids camping, even if it's in the backyard. It's an adventure. It's fun. You can bond and roast s'mores and have a fire. Teach your kid how to make a fire. All good stuff. That's the advice for today. We'll see you next time.